Hello traders, this is Julio Pineiro here again. I'm gonna be doing this midweek market focus. Uh, Today is the 10th of July of 2013, and what I'm going to cover today is Fibonacci levels. Um, it's gonna be Fibonacci retracements and extensions, um, and how to identify them. It's going to be based on higher time frames more than anything. Um, as Fibonacci levels, they're also used on even higher time frame, which are the weeklies and monthlies, and then obviously the daily chart, and no less than the 60-minute, I would say. So it's kind of higher time frames type of thing. Um, I'm gonna spend most of the time going through charts and identifying levels so we can reinforce the knowledge on Fibonacci's and focus more and narrow it down all the way to this level, which are obviously hard to see for those of you who haven't been using them. Right, let's get started. I've got my usual 4 charts, alright, and what I'm gonna scan through the market. Um, this is the euro versus dollar, and it's making new highs and new lows. Alright, so it's very messy as it's making a new high and a new low there, so it is not making higher highs and higher lows or lower highs and lower lows, so it's kind of in between. And there is an inverse symmetrical triangle which looks a bit awkward. Okay, so um, price came back down to this level here, which there is a nice level down here, and it's bouncing a bit. There's nothing up there. And in terms of Fibonacci levels, first of all, the settings are these ones here. So I'm gonna leave it like that for a while so you guys can get the right numbers and yeah, all the settings right. You can pause it as well, and then you can get all the figures done. Make sure you get the on and off right as well. Okay, so, the ones I use is the 38.2, the 50, 618, 78.6, 1.272, the 1618, the 21 and 0. Okay, 21 and 0, you can put them on a different color, which are the extremes, and the one in the middle. And then the 618 is known as the magic rejection level. It's a very powerful level. So you can put them all the same color. Let's say, for argument's sake, um, all gold. These three, and this one here too. Like that. Now, the first time you click on it, you're gonna have this tick, a tick here on this one here, on this box down here. So make sure you get rid of that and put a tune there, so it's nice and clear. So you should have all the numbers there. Make sure you get the on and off right as well. And then as you get it done, click on default, save current settings as default, and then click OK. So that is being all saved, and ignore the one that says Fibonacci extension, because we're going to use the Fibonacci retracement for both, for the extensions and the retracement. So now, from this low to this high, is up. We'll be looking at Fibonacci extensions down at the 1.2, 1.6, and 2, which is miles away. So 1.2 if it does break through. So there's nothing there at the moment. Now in terms of past levels, will be from this high to this low. It's broken through the 1.2. That's a Fibonacci extension. It's broken through this 1.2 here. Okay, from this high to this low. It's broken through this 1.2, so this is not valid. It has to touch and bounce. So this is not valid, so I'm not going to spend much time here. So I think it's nothing here. Next one, cable. Let me just remove the sniper one. There. Right. back to cable. Right, so we've got from this high to this low, this high to this low. There it is. We got the Fibonacci extension 1.2. Can you see that now it's bouncing off it? Before it wasn't bouncing off it on the euro, but now it's bouncing off it. Okay, we can see it clearly here. Let me just put a few arrows there and there. So from this swing high down to this swing low, it went up 1.2% of this whole move before it turned. Okay, so the one we're looking at, to make it even more clear, is the 1.272. There it is. Okay, where the cursor is now. So from the high to the low, went up 1.2% of this whole move before it turned. Okay, so let's get rid of it. I'm gonna show you another one now. Make sure you get your notes down, snapshots. Yep, get your screenshots there in place. Save them so you can go back to those. Now I'm gonna pick again the same tool, and now it's gonna be the other way around, from the low to the high. And guess what? We also get a Fibonacci extension 1.2, but from this low to this high, it also goes down 1.2% of the move before it potentially turns, and it's on a level there. But again, this is very messy because it's making a new high and a new low too. Okay, when you're showing you the Fibonacci extension, how it works. So if you do it the other way around, it'll be from this high to this low is also giving a 1.2. So the levels are overlapping there. Okay. Right, so that's the 1.2 there as well, and the 1.2 there as well. Okay. As I said, these are very funny pattern. You're not gonna get many patterns like these, making new highs and new lows. It becomes very, very messy overall. Right, now, okay. We're gonna look at a few more Fibonacci extensions. From this high to this low, Fibonacci extension 1.6. There it is. Let's make it more clear. We're gonna go back to this date. There we go. That's what we've seen on the 12th. Yeah, on the 12th of April. That's exactly what we had. So from this high to this low, it went up 1.6% of the move before it potentially reverses, and that's what it does. Yep. Okay, so now once it goes down like that, now we're gonna go forwards. There. Let's see that turning point. Let's see what it's coming up. That's not valid because it's in between. Okay, it's broken through the 1.2. Yeah, from this swing high to this swing low. Yeah, always the previous swing high to the previous swing low. It's broken through the 1.2, so it's invalid. It's broken through the 1.6, and it hasn't reached the 2, so it's invalid because it's in between the 1.6 and the 2. So it's nothing there. And then it goes down. Okay, so it's nothing there. It never quite reached the number 2 there. Okay, fine. Now let's carry on. Japanese yen. I'm gonna make it bigger here. Let's see. From this swing high to this swing low, we're looking at a Fibonacci retracement level, which didn't quite reach it, the 78 level there, before it potentially turns, which is turning now. But again, this also made a new low here, so that's not quite qualified from the swing high to the swing low. Fibonacci retracement on the 78.6. Let's have a look From here to here is on the, let's see, that's not valid neither, because it's well past the 2. From the high to the low, it's well past the number 2 there. So there's nothing there. Now from this swing low to this swing high, this one did bounce on the 1.2, came back up, and then this is invalid as it is in between. So it has to be bouncing off a level. It can break through, but it will have to pull back down and then go from there. This will be a nice, seems to be that it's a nice level. There it is, perfect. 1.6. So from this swing high to this swing low, that's a perfect 1.6 Fibonacci extension. Let's make it clear. We're gonna go back to that date. There it is. Right. So from this swing high to this swing low, it goes up to the 1.6 level before the potential reverses. We go forward, and then it does reverse. Okay. And now here, resistance is becoming support, and it's bouncing off the 20 moving average, and it gave a low test bar, and then off it goes from there. That one failed. Came back down to the 50 moving average. Gave a low test bar, but it's kind of losing the momentum here as well. And then it kicked off. That was news driven. That was an intervention there. So this one's is actually, it was a good call actually. This one here, this low test bar, which came back up slightly and then it failed. But it was a great call. In fact, I think I've taken it. Even this one here. So resistance becoming support, and it even gave. Let's see if they gave any Fibonacci retracement. I think it gave the 38 there. There it is. 38.2 from the low to the high. 38.2 Fibonacci retracement before it potentially carries on, which failed. Okay, and it was on a level where resistance was becoming support. Let's go back again. There. Yeah, I did take that one. It was a beautiful trade there, even though it failed, but it was meeting all the criteria and everything else. So we get higher highs and higher lows, bouncing off the 20 moving average, low test bar, resistance becoming support. The only thing is that the entry was too close to the top. That's the only thing. It wasn't a great pullback. That's why the Fibonacci retracement was only on the 38. Otherwise, it would have been down on the 618 or the 78 even, if it was a greater pullback. So then we go forward. Let's see, that one failed, and then it gave a low test bar of the 50 moving average, and it was on the 618 Fibonacci retracement, but that was news driven. Okay, this move here was news driven, and there's an intervention there that kicked off, and pull back down, and then it gave a double top formation there, and then it carried on making new highs, and then it failed, and that's where we are now. Okay, so it doesn't look clear at all, I have to say. It was rising for a while, it's going up for quite a while, and now it's sitting on the 100 level there, which is 100 to 1. Okay, it's a psychological number there, and it's not making new highs. It made a new low, messy again, nothing there. Swissy. On the Swiss franc, let's see what we've got. From this high to this low, probably 78 is broken. There it is. It's broken, and it again looks messy because it made a new low and a new high there, and it's moving quite aggressively without following any pattern, and that's why the moving averages, they don't work. Okay, if it's bouncing nicely of it, if it's trending nicely, it's going to be bouncing nicely of it. For example, on Euro or even the Aussie. Aussie dollar was cycling downwards nicely, giving lower highs and lower lows. That's why it was bouncing off the 20 moving average. Now we go to another one, Euro Aussie. Same story, was bouncing nicely off the 20 moving average was there, the 10 was very, very tight. We put a 10 moving average because the more aggressive the trend is, the lower the moving average. There we go. That's the 10 moving average. So if the trend is very, very aggressive, it's going to be bouncing off the 10. If it's less aggressive, it's going to be bouncing off the 20. And if it's making some nice big cycles, it's going to be bouncing off the 50 moving average. If it's messing about, it's going to pull back down to the 200. But then it's going to lose the momentum as well. Okay, so just remember that. The more aggressive, the lower the moving average. So if it's very, very sharp, the 10 moving average is the best one, followed by the 20. Right? Now here, for example, it gave a double top formation of that level, and then since then it's been going down. So they get a double top formation, and this one seems to be the 1.6 by the look of it. So from this swing high to this swing low, it's actually the 1.2. There it is. So it's a Fibonacci extension, which actually broke through. It's actually in between. So it's not quite valid. It's broken through slightly. There is in between the 1.2 and the 1.6. So not quite valid. It has to touch the 1.2 and then reverse. Okay, the 1.6 was a bit higher, just there. So just by looking at that, this would be 0.6 of this whole move. Yeah, 0.618 of this whole move here. So from the high to the low, it goes down to the 1.2, a bit past the 1.2, and then it reversed, and then came back up again to say hi to this high, and it bounced off it back down again, and it made a new low, so it lost the momentum completely. So actually I've taken this trade here. I think it was on I've taken Aussie, Euro Aussie and Aussie CAD from this low to this high. He gave a 78.6 Fibonacci retracement, which was brilliant. So great call. Didn't go too far though. Made some small money. Actually, I had my target at just below this high, so actually spot on. Hit my target and then came out there. So from this low to this high, you have a Fibonacci retracement of the 78.6 before it turned. So that one there. So from this low to this high, came back down to the 78.6, which is where the 20 moving average was, and then you get a an inside bar and a low test bar as well. You remember the midweek I've done a few weeks ago about price action? That's an inside bar, and not only that, but it's also a low test inside the previous bar. So it's an inside low test, which is very, very powerful, and it represents indecision in the market. Okay, and then I had an entry above the highs, stop loss below the mother bar, which is the bigger bar, and also actually was just below the 20 moving average, and then it kicked off from there, came back up to here, hit my target and came back there. Okay, even if you trail it, you get stopped out there, which is you make some small money there as well, right? And it lost the momentum, made a new low, so nothing there now. Move on. Let me just show you the one I've taken as well. Was Aussie Canadian, which also lost the momentum because it obviously is Aussie driven. So I've taken this high test bar short, which we called it on the on the bootcamp, on the last bootcamp I've done. I said place an entry below this low and the stop loss above the high. It didn't get triggered, and then what you have to do is you amend it based on the new high test bar, and that is giving a much better reward to risk ratio, and then it kicked off from there. This one got triggered, so you get a high test, doesn't get triggered because this low doesn't take the previous low out by more than 5 or 7 or 8 pips, depends on the entry you're giving it. If it's 5 pips plus the spread will be around 8 or 9 pips type of thing. If it's just 5 pips, it will be just 5 below this low, which never got triggered anyways, which means you have to place it on the next high test bar. You actually amend, you don't even have to cancel it, you can even amend it. as well. And actually, I think that was an income generator too. Go to formulas, income generator. It was giving an income generator on the previous bar, but you can perfectly take the next one, which is even better, and it's actually bouncing on the 20-moving average, and it's actually giving price action, which is a high test bar, very powerful, and the phase 2 finish too. So it was a brilliant call. I'm gonna remove that, take it away. We're gonna take the 10-moving average out as it's not working very well. It's, the one I'm looking at is the 20. So we're gonna go right click remove and oh sorry, I've done it the other way around, I'm afraid. Right, what I'm going to do, I'm just gonna put 20 there, 20, blue, done. Right, so in terms of Fibonacci's, gotta be outside the box there. In terms of Fibonacci levels, let's say from this low to this high, we get the 1.2 Fibonacci extension before it's 10, and you get a low test bar there as well. Brilliant. Now we're gonna remove. Okay, before I remove it, I'm gonna do it again from this low here on the 11th of June to the top of the cycle, the 14th. You draw your Fibonacci extension, the same one, this one here, the Fibonacci retracement for both. Remember. So from this low to this high, it goes down 1.2% of this move before it potentially reverses, and it was giving a low test bar as well. Right, now we're gonna get rid of it. What else? Now from this high to this low, that seems to be the 78 just about. So from this high to this low, there we go. That was the 78.6. So from this swing high to this swing low, we're trying to measure the retracement now, and it's spot on there. The 78.6. So from this swing high to this swing low, it retraced 78% of the move before it carry on going down. Okay, because the whole chart is going down. What you can do as well to just be aware of the momentum, put an arrow just following the actual uh, trend, and just kind of make it parallel to it. That's the word. So you make it parallel with following the same angle type of it, and then that's the one going down. Fine. And then you get the Fibonacci retracement from the swing high to the swing low is the 78.6. Now my target was, based on this previous swing low, was there at 55. It was all fives actually. I've played 0.9555, all fives. So 0.9555, that was my target, which also I've placed it as a trade alert. For those of you who are subscribed for the trade alert emails that we sent out from here, from the trading floor. So all the trades we place, they all sent out for those of you who have the subscription there. Obviously for all the unlimited wealth delegates, and for those of you who got it extra. So yeah, you get the trade calls, and I placed it on that day, and then got triggered in. I had my target there, and also for the trade alert I had my target there as well, 0.9555, and it literally hit the target, went down a bit lower, and then it reversed, and now it lost the momentum fully. Now it's not making new lows, so now it's definitely not looking bearish no more, as it's not making new lows. Okay, it's not making lower highs and lower lows, so it lost the momentum as all the other Aussie pairs. Right, let's see what else we've got. Have a look at the FTSE. FTSE is looking very messy as well. Made a new high and a new low. It looks a bit more clear on the weekly chart actually. We've got the weekly chart here. Let's take all this out, and we've got a nice trend line there going up, making high highs and high lows, although they made a new low there. And now if you copy and paste this line, there we go. That's the one on the FTSE. In terms of Fibonacci levels, from this high to this low, it went up to the 2 Fibonacci extension before the 10, and the other way around, it went down to the 1.2, spot on. So from this low to this high, went down to the 1.2 before the 10, and it gave a key reversal bar. That's what it is, because it's not a low test, before it carried on going up, and it's all aligned there as well. The only problem is that this low was lower than that low. There's a final little sub cycle there within the whole cycle. Back to the daily. So the chart is drawn on the weekly chart. It's based on the weekly chart, and that's the way it looks on the daily. Okay, because obviously it's looking at the bigger picture. All right. Okay. Now let's see what else we've got. Now we've got Euro Pound here, which it's not looking very clear. There's a massive high test bar there. It looks massive, but it's only 89 pips, I think it was. Let's measure it again. It was less than 90 pips. Let's see. There it is, 85 type of thing. 85 pips. It looks, well, it's big in comparison to the other bars, but 85 pips is not bad at all for end of day trading. It actually gave an RSI divergence there. He gave a Fibonacci 1.6, seems to be Fibonacci extension 1.6. That one I placed it as well as a trade alert. Now, to be honest, I don't like it. I'm starting not to like it much, to be honest, because it lost the momentum. It should have been triggered and carry on going down. So I might send another email saying to kill. Yeah, quite possibly just to tell you guys to kill the trade at break even. Let's see how it performs. But don't know. I don't like it much no more, because if it, as it triggers, it should just carry on going down. I wasn't expecting to make much out of it, to be honest, as the 1-to-1 is barely there. The reward risk ratio, there is 1% risk, 1% profit will be down there, so you cannot get much out of it. I should bring it back down to here, be like a 1.2 to 1 or something. And also the horizontal level is, I was expecting it to close a bit lower actually as well, because the level is there, and when I placed it, it was actually trading on the line itself a bit lower even, so which is there, which was kind of rejecting the level, and so the horizontal there is not that clear anymore. It should have closed a bit lower actually, and that's what's happening in terms of the horizontal. If you put a level up here, put a level up there, and now you go back in time, looking at the level at the top of the high test, it's a very nice level there. Touching there, there. Go back a bit further, it's touching. Was it there as well? There, so it's a nice level. It's definitely more than 3 touches there. But yeah, it should have closed a bit lower, and the high test bar is a bit too big. Let's see what happens. Let's see how it performs. I might just kill the trade at break even. The stop loss is up there. It's a trend reversal trade against the trend. As I said, I don't like it much anymore. I'm looking to pull out that at break even, or just by the moving averages there. If you're lucky to reach the moving averages, just be looking to pull out there, because again it's not that clear. That level is solid up there, back in time. There are a few more horizontal levels here. There's one there and one there. So that's the range. There is a range within the range. So that's the range, and there is another range without using this level, like that. Okay, so there's a range within the range, and it's kind of broken through there, and it actually closed just above. It's pulling back down slightly now. Let's see how it performs. 60 minutes, we'll have to take this low out and start cycling downwards nicely. We can go for a small trade, as I said, just a one-to-one type of thing. Okay. He's running out of steam. He's losing the momentum. That's because of Japanese yen. It's pulling down. There it is. Right, the stock market has been performing well over the past few days. We get the Dow Jones flying, the S&P going up as well. Brilliant. And the Nasdaq going up too. Brilliant. Because as I said, I trade a lot of stocks. I trade obviously forex and commodities, but I trade a lot of stocks too. And as I've been saying over and over again, I want the stock market to carry on going up, and that's what it's doing. So I'm very pleased with that. We've got the Nasdaq, which made a new low there, and that wasn't very nice to see. And it's now gone up massively, and it's about to break through those highs, which is brilliant. And we got the S&P flying as well. Great. The market is closed, by the way. It's going to open at 2:30. It might pull back down slightly as the FTSE is going down slightly, but it's definitely looking very, very bullish, especially on higher time frames, on the weekly charts and monthly charts and stuff. Even the Dow Jones is the main one actually. Oh, that's the monthly chart, which is right at the top. We go to the weekly chart. It's looking good. It's looking very good. And high highs and high lows. Came back down to the 20 moving average. Took the high out last week, and now again it's taking the high out, and it's right at the top. So that's good. Now back to the daily. Okay, fine. It did lose the momentum slightly, but it's fighting back up again. Right. We got gold here. Had a massive sell-off, and it's gold tends to respect very nicely all the Fibonacci levels. Let me take all this out. So now in terms of Fibonacci extensions and retracement, excuse me, from this high to this low, from the previous high to the previous low, that's the 618 level there. From the swing high to the swing low, 618 Fibonacci retracement. Then from this swing high to this swing low, we'd also get a Fibonacci retracement on the 618 again. As I said, this is a magic rejection level. It's a very powerful level. From the high to the lows, 618. Now if you go back a bit further, it tends to happen over and over and over again. From this high to this low, from the high to the low, we get a 55th level of this one here, 55th retracement. From this high to this low, we get the 618 again. So we get the 618 there, goes down. Now from this high to this low, we get the 55th level. Then from this high to this low, so also from this one here to this low, we get a 50% retracement there again. And then based on, where's it gone? This one here. Now from the high to the low of that one is not quite qualified. It is qualified from that one. 50 pip. Then from here to here, 618. And then these last ones down here, from this high to this low, 618. From this high to this low, just past the 50. And then the last ones, from the high to the low, that's on the 50 as well. From there is on the 618, so it's actually from the top, from there on the 50 spot on, because all the, okay, here is the thing. Right, from this swing high to this swing low, it retraces once again 50% of the move. It's literally half. Yep, that's how you can remember. So the 50 Fibonacci retracement is just 50%, so it's half of it. From the high to the low, yeah, from the previous swing high or the most recent swing high to the most recent swing low. For those of you who are covering Fibonacci retracement and extensions for the first time, or the second or the third time, when you're still reinforcing it, please write it down. So it's always from the most recent swing high to the most recent swing low, or vice versa. It depends if you're looking for an extension or retracement. But if it doesn't match up, then do it the other way around. Get from the low to the high then, and it'll match up. I mean, you'll be doing it well. Then if it matches up, that'll be a different story. Okay, so that'll be from the high to the low, and it retraces back up to the 50 Fibonacci retracement. In fact, just as you finish watching this webinar, what you can do is to do yourself. Okay, go to gold and then just play with it. Obviously, get all your settings right, and then just do it and practice. And what you can do as well is to pause it, pause the webinar, and then obviously go to your charts, do it yourself, play back again, compare it, test it, do it again, delete it, do it again, and that way you reinforce it and reinforce it and reinforce it by doing the same thing over and over again. Okay, it's all about practice really. So as I said, from the swing high to the swing low, it goes up to the 50 Fibonacci retracement level, which is half of it, before it potentially carries on going down. It can break through, but it will have to pull back down and close on the line or lower, which is what it's done. If you see very carefully, you'll see that actually none of the bars closed above the level. So that's what I mean when I was saying before that it can break through, but it will have to pull back down and close on the line, on the 50 retracement line or below. Okay, and that's still qualified as a Fibonacci retracement on the 55th there. Okay, so that's fine, and it kicks off from there. Has another massive sell-off. That was when the Chinese economy was shrinking. When the Chinese economy goes down, because they own most of the gold reserve in the States, that's when it does go down. And also because the gold spot, believe it or not, is against the US dollar. In fact, it tells you that. Okay, so it's against the US dollar. So now, as we know, the US dollar has been flying and it's been just going up massively. So that's why the gold spot goes down, because it's against the US dollar. So not only because the Chinese economy is been going down slightly, it's also because the US dollar has been flying, and also because Cyprus sold the gold reserve as well. And yep, and all these fundamentals behind it, that's what has caused this move. Although the lower it goes, the cheaper it is. For those of you who are looking to bring it back up again. Um, now it's not making new lows. Now in terms of levels, there is another level down there by the where is it gone? The 1100 and a half there, and then by the 1000 level there is a huge level there by the 1000, which is miles away still, but that's what it's heading to. It's heading back down. Now if we go to the monthly chart, it's been the first time in 13 or 14 years that has broken through the 50 EMA. So in other words, last time it broke through the 50 EMA was in 2001. It was a while ago, and since then it's been just going up, making higher highs and higher lows, and it's gone up to there. It almost reached the $2,000 an ounce up there, and then it failed to make a new high, and then it dropped down massively, and that's where we are now, by the 1200 level. Um, okay, right now, in terms of Fibonacci levels of the monthly chart from the swing high to the swing low, that went down to the 1.6, reverse it a little bit. There's nothing there. And now there won't be Fibonacci levels matching up on the monthly chart at the moment. And this looks a bit messy on the weekly as well. Can you see the moving averages are slowly curling down as the price is dropping down, and it failed to make new highs, and then it broke through these lows, and then off it goes down. We go to the daily again, and here it's making lower highs and lower lows, and it's bouncing nicely off the 20 moving average because the trend is very powerful, and that's what it does. Right, let's have a look at EasyJet and SZJ-LON. We've got EasyJet here on the daily chart making higher highs and higher lows non-stop. All it does is to make higher highs and higher lows. Here they gave a double top formation, so I've got this on my watch list, and there was a beautiful trade there, a breakout or symmetrical triangle like that. Let's make it okay, that one, that's fine, or even like that. A symmetrical triangle or a breakout from consolidation, and then it puts a the entry was above the highs, stop loss below the lows, triggers in, and then went all the way up to here, came back down, high highs and high lows, back up again. This high failed to take the previous high out, came back down, still on making new and higher lows, still making higher lows there. Then it broke through this high. Now it's pulling back down, so I'm looking to buy it back up again. Take this line, put it away. I'll be looking to buy it back up again. Let's see if it pulls back down to the 20 moving average, and you get obviously some nice price action there, and that seems to be on a 38 Fibonacci retracement. There we go, spot on. If it pulls back down a bit further, that'll be on a 50 Fibonacci retracement level. So from the swing low to the swing high is on the 38 level now, which is a bit too early to buy because we're not going to buy above the highs. It's a bit too aggressive, and it's like the other call on the Japanese yen was a bit of an aggressive trade, the one we covered right at the beginning. If it pulls back down to the 50 Fibonacci retracement level, then that'll be resistance becoming support, and that'll be a good trade to go for. So I'm keeping an eye on this. I made some big money over the past few months just buying EasyJet, and he has paid off nicely. I've been in and out, in and out, in and out. Sometimes it's just better to sit and wait really, and just hold it for months, and then make like 1,000 pips out of it. And then if you do that once a year, you'll be doing great. You're gonna be a millionaire in 5 years. So that's why sometimes it's just better to sit and wait really, and move your stop loss to break even and let it go. For those of you who understand the market very well, yeah, that's the way forward really, to have a few stocks running all the way, and then some, a bit of intraday here and there, and then a bit of forex trading. Can trade the indices too, commodities, and don't put the eggs on the same basket. You gotta diversify your portfolio, and that's when it pays off. All right, I hope you've enjoyed it, and I catch you all soon. Um, if you wanna go back to the previous ones, make sure you do it before. Well, this one is gonna kick off by 6:30 in the afternoon, and as soon as this one kicks off on the website, the last one will disappear. So make sure you save them or you watch them twice or three times, and you take your notes and everything. So then you can actually you don't have to watch it again. And if you want to watch it again, you can download it and then go back to them. And if you watch them twice or three times, you'll know everything about it. Right. The reason behind it, in terms of why I cover the Fibonacci retracements and Fibonacci extensions, is because of someone placed a comment on the past week midweek market focus, which was on Raymond's midweeks, and someone asked us to cover the Fibonacci retracements and extensions. So here we go. Feel free to start using them, and also once you start playing with it, then speak to your coach about it, and so that he can give you uh, a few more tips here and there, and he can also obviously manage it throughout the time. Right, I'm gonna leave it here, and I'll catch you all soon, as I said. All right, you take care. Cheers there. Bye now.